I do think we're going to come into some type of correction over the next several months. It could be fairly sharp. It was 34% back in 2008. We could see 25 or 30% pullback in gold.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 30th through October 7th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at just $60 over spot. Next, we have 2024 1-ounce Silver Britannia at $3.10 over spot. And finally, the 2024 1-ounce Silver American Eagle is still just $5.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah. Always a pleasure.
Well, it's great to have you today. I know we've hit the level 2600, 2650 for gold that you've been looking for quite a while. So your perspective on this achievement the gold market has made, and where do we go from here?
Yeah, I think the gold market, precious metal space is kind of the most interesting right now because it's had a very nice run. I still think there's potential for some more upside. Long story short, we have seen the price of gold move higher. It's hit that 2,700, 2,650, 2,700. You and I actually talked about this long time ago. These have been targets on the charts actually for like several years, which I'll show you in a second. But we've had a really nice run up in gold over the last couple of weeks. We're seeing a little bit of pressure just the past two trading sessions, which really at this point is nothing to be concerned about because the market never goes straight up. But what's interesting is if we go back to, a couple different views on this chart, and I love to use Fibonacci extension. So if we were to take a previous low in gold and this rally and this consolidation phase, it points to where we could see gold end up going if it wants to have like a blow off phase. There is potential for gold to rally somewhere up to around 2,900. But with that said, if we were to look at the big picture, the monthly chart is really the most powerful one. And this brings us way back in time to early 2000s during that super cycle. And if we were to take the low for gold and the high from 2011, and then the low that we saw back in 2015, 2016 area, it gives us this target here, this key target around 2,700. And there's a few different chart patterns that do point to this. So this here is this giant pattern, which you and I have talked about before, massive bull market, super cycle, a pullback. And then of course it says if we come up, my theory is if we hit the 168, which is this orange line, if we hit that level and pause, we almost always, it doesn't matter the asset class, almost always go up to hit the 100% measured move up here, which is where we are now. So this is like two super cycles. We had one start in early 2000. We're still in a super cycle for gold. Where we are right now in gold is actually very similar to right over here, which is just before we come into some type of financial crisis, some type of recession. That is one of the reasons why we see gold performing so well is people are worried about currencies. They're worried about the economy. They're worried about stocks falling. So they're moving out of those markets and into a physical asset, which, isn't quite as controlled in that regard. And that's what we saw back in 2007, 2008, or 2007. We saw a big pause. And then people piled in, worried about bubbles all starting to burst, which we're starting to see. And of course, we've had that. We've had a multi-year pause as well in gold, and now we're in this area. And so looking at this 20-year chart pattern, I mean, we've hit that measured move, we've tagged it. And so now the question is like, how many more of these bars, this is the monthly chart, Elijah, how many more of these bars do we have before it kind of tops out and rolls over? That's the big question. And each bar is a month. So I think this year we're seeing gold top out. I think we're also going to see the stock market top out. This is, to me, is one of the most powerful indicators of where the mentality is, the money flow, where we are in these cycles. So I like gold. I like it long term. I own a lot of physical. I do think we're going to come into some type of correction over the next several months. It could be fairly sharp. It was 34% back in 2008. We could see 25 or 30% pullback in gold. And you and I talked about this a long time ago. We've talked about this many times, but once we do, and if we do have this pullback in this financial reset, this is when I believe is going to be the next like golden opportunity, pardon the pun, for gold to really skyrocket. This will be the last opportunity to get physical metals, to get mining stocks, whatever you want, before we go into a multi-year huge run into the 4,000 or 5,000 mark. It would be very similar to this phase in gold back over here. The second half is the big move, a big move for gold. So that's it in like a high level view of kind of where we are. Not a whole lot of upside left, but there is a little bit kind of to the upside still.
So I know I've talked to people who are saying that, there might be a small pullback in gold, but it sounds like you're looking at a pretty significant one that could, take gold maybe even below the 2000 mark.
I think it's possible. I mean, it really depends on what the crisis is, like why everything starts to break down and unwinds, and how much how big the margin calls are. People like literally having to liquidate everything. This time might be a little bit different. Maybe it won't pull back quite that far, but I think people should be like mentally prepared. If it does, it's perfectly normal. So I believe gold could pull back to 1800, 1900 during a big reset. And it's not a bad thing. In fact, to me, if it does that, it's like the ultimate opportunity. It's actually a very good indicator that the money is cleansing. All the assets are cleansing. And then after everybody's been shaken up and worried, then gold becomes like everybody wants to pile back into gold and ride it up and stay away from all the other stuff that they lost a lot of their wealth on, which is like going to be like real estate and stocks and things like that. So I do think there's potential for a good pullback, but I mean, there's a lot of currency. There seems to always be a lot of currency crisis going on. Everybody always says the dollar is going to zero. And usually over time, fiat currencies all blow up. So I do feel like we're obviously inching closer, but it's also felt like this for the last like 25 years that I've been in the space. So it's hard to tell when a fiat currency is going to give up. But I do feel with crypto and the currency and the debt, all of that in the States, I do feel like we have a better story now than ever for potentially the dollar to really collapse. And we see like gold, especially in US dollar terms, really skyrocket.
Now, when it comes to silver, I know we've seen quite a run in silver. It's nowhere near all-time highs, though. Your perspective on where we go from here?
Yeah, I believe, I still think there's potentially one more run and squeeze higher, one more rally up in gold, silver. I do think we could see silver. This is the monthly chart. Obviously, we're nowhere near the highs, but it has been breaking out of this chart pattern. And we can use the same theory. We can use Fibonacci extension based off the average lows here and these highs and this low. We've got potential for silver to run all the way up to around $34, which will bring us, right into these previous highs right over here. This is a very significant area. So I do think there's still some upside. I mean, silver is only at 31.30 right now. So for it to go to 34 is a pretty decent move. So percentage wise, silver's got more percentage upside. It could be very short lived. It could be a quick rally. But overall, we're going to see probably gold and silver more or less top out and rally at the same time. So when they both rally up and hit their, push deeper into these resistance levels, to me, that's a level to be like, hey, if you're more of a shorter term player, it's a spot to lock in some profits. If you're a longer term investor in metals, just know it's hit a measured move, which is a good thing. And now it needs to just do its thing. And now it needs time to heal that rally, because what goes up usually comes back down for a bit. And just know there's going to be some weakness, for a year or two before we see the start of something big. So.
No, when it comes to kind of the backdrop of kind of the background of why all of this you're looking for this to happen, is that you're thinking that the stock market is going to top out too, and we're going to see this crash. So can you share a bit more about the backdrop for which, this pullback in metals is going to be happening?
Yeah. So, I mean, there's a basic theory here that there's 4 stages to the stock market. I believe we're in a stage 3 topping phase, which is kind of been camouflaged in masks from the big tech companies dragging the indexes up, not giving us this particular type of chart pattern. But if you were to take like the equal weighted SP 500, the small cap index, and the micro cap index, which are like thousands and thousands of stocks, then you get to see this actual stage 3 topping pattern playing out and realize, okay, the stock market actually is putting in not only this chart pattern, but we have economic data getting worse. We've got unemployment going up. We've got business sales have like maxed out on the SP 500. They're all downgrading. All kinds of things. Credit card debt is skyrocketing. Delinquencies, mortgages are starting to become very delinquent, both commercial and residential. So I believe this is what happens in a stage 3 is we tend to see things starting to break down behind the scenes, even though the stock indexes are holding up really well. And if we look at kind of the cycle as a whole, precious metals, gold tends to perform and come to life. Energy stocks, they haven't been performing well for the last couple of months, but they're still up near all-time highs, just like we've seen before every major financial reset. And industrial capital goods have been doing exceptionally well also because all these companies had good earnings and they've all upgraded their equipment. And so industrial and manufacturing have really good earnings, but that's typically companies, just because there's a huge lag, they upgrade and spend all their money when they think things are good, but it's the end of the cycle. So all of these have come together, and each one of these is a warning sign saying, okay, we have all these things starting to happen. There's reasons for all of these, different reasons, and they all tell us that the stock market is running out of steam and we're going to go into some type of big correction. And obviously, I mean, it leads to a lot of pain. Eventually, when things break down, people get anxiety and denial and panic, and they go through the whole 2008 bear market crisis again. A lot of people actually went through this painful scenario in 2022, watching their accounts drop 25%. And that really, 2022 is nothing. That is a warm-up pullback compared to what I believe the stock market can do. If we look at the monthly chart of the SP 500, I mean, we could very easily see a 30, 40, 50% correction in the stock market. And 2022 was really just like a 25% pullback. So there's a lot of damage that can be done. And whenever we get into these big market corrections, I mean, everyone has been about 50 plus percent. And, we're just overdue. We have the volatility in this stock market. We've got all kinds of things breaking down. So that's what supports like my whole theory around gold. We're seeing the same scenario happen in gold and other asset classes that happened just before a huge market reset. And one more other thing is our utility stocks. If we take a look, I'll just go to the daily chart of utility stocks here, but we've seen utility stocks just on this huge tear over the past few months. And when utility stocks just take off and dramatically leave the stock market behind, we tend to see very soon, within a month or so, or two, we see a big correction in the stock market. It doesn't mean it's the market top, but we generally see a huge setback and pullback. So there's a whole bunch of things, both on the big picture, as I just showed you, as stages and the cycles and the sectors, versus like just what utilities are telling us right now. And to take it one step further, to support like the reason why gold might pull back a bit and become an awesome opportunity is if we look at the big picture of bonds, when one major asset class is putting in a major top, we usually have another major asset class putting in a bottom. And bonds have been down forever, and they're starting to turn a corner. And if the stock market and the economy weaken, they're going to continue cutting rates. As they cut rates, bonds go up. And of course, we've seen the opposite. Before, they've been raising rates, and of course, bonds go down. So stock market is topping, bond market is bottoming. All the signs are there. It's just, again, these are monthly charts. So even though we see it and pretty much know it's coming, we have to put in the time and just let this continue to unfold. These are multi-year patterns, which is why, we've been talking about it for months and quarters, because it takes a long time for these major trends to unfold. I mean, bonds have been trying to bottom for, 2 years already, and the stock market's been trying to top out for 2 years already. The stock market hit a stage 3 topping phase in March of 2021, and so it's putting in a major top, and bonds are putting in this bottom, and they take forever to unfold. feels like forever.
Some of the people that I talk to, though, think that this time around, we're going to see possibly a fall in the stock market, but that, the Fed easing and the Fed cutting rates and all of that will push money into safe havens like gold and silver, and gold and silver will not suffer that same kind of pullback we've seen in 2008, 2020, along with the stock market. So your take on that?
I mean, it depends who you're talking to, right? I mean, there's so many pockets out there. A lot of people have a bias. If they're in the precious metal space, they naturally want to be bullish. People don't want to hear me talk about falling gold and if pulling back below 2000. That's not what people want to hear. But I'm a technical trader. I don't fall in love with assets. I say it how it is and what the charts are showing so that you can be mentally prepared or financially prepared to either benefit from it or avoid it or just accept it and ride it out. I mean, if the stock market goes weak, 100%. That's why people are moving into gold right now. They're worried. They're moving into it. If the Fed's cutting rates, well, what happened in 2008? All the Fed did was keep cutting rates. They cut rates to try to save the stock market, to save the economy. But there's so much liquidity going on, meaning people are panicking, dumping shares, and being forced to sell what's in their portfolio because most people are on margin. And then once you draw down a certain amount, the brokers start executing. It doesn't matter what the Fed does. He can keep cutting rates to zero and doesn't mean gold's going to take off. Sure, it didn't happen last time. I mean, so it really just comes down to if you have a bias or not. I don't have a bias. I'm just going off what his historic price action has done, relationships have done, what the charts are telling us. And I just follow the momentum of them all. So for sure, gold could just take off and skyrocket. But I haven't seen that happen before. Nothing is really pointing to that. And a lot of people keep thinking like the dollar is going to crumble and all that stuff. But still, the US dollar is still kind of the main reserve currency. When all hell breaks loose, we tend to see the dollar rally and stock market crash. And if the dollar rallies as still that one currency that people want to hold on to, then the rising dollar is going to put pressure on gold on itself in terms of the US dollar value for gold.
You mentioned how we might still have a little bit of a run to a little bit higher to go from here. What are some of the signposts that you're looking for that would signal things might be ending now? We could be heading down for both the stock market and precious metals. Yeah,
I think really it's going to come down to really just more so chart patterns now. To me, the big picture says, hey, the markets are very weak. They've lost a lot of their momentum. So I think it's going to come down to price action. Are we going to see like one big last rally in the stock market, a 4 or 5% rally, maybe another couple percent rally in gold and silver? And then is the next bar, like say it's a weekly bar? I would generally be looking at a weekly or monthly bar to get bigger confirmation of this trend reversing. We really just need to see price run up and then get slammed and sell off. And, the problem here is people don't want to wait for that. They're like, oh, I want to sell near the top. But the reality is you don't know it's a top until it's clearly reversed, and you're going to get out after it's like, if you're long and you want to get out after it reverses, you've already given back a bunch of those gains. So we really just need to see price rally and then eventually get slammed and hit hard. And the chart pattern has to be bearish. We want to see big selling volume. We want to see big red bars, preferably like some bearish candlestick pattern. There's some that are much more bearish than others. And of course, a candlestick pattern, if it is bearish and it's on a monthly chart, typically 1 to 3 bars after that, you get the carry through of what that reversal bar means. So if it's a negative bar, a bearish one that's telling us the stock market is topped or gold is topped, we're going to have another 1 to 3 more months of probably downward pressure from the momentum of that reversal candle. So you really don't know it's topped until it's topped. And you just have to accept that, hey, if you've got to let it turn around before you can actually say it's turned around. That's the reality of it.
Fantastic. Well, Chris Vermeulen, we really appreciate your time today. If people are interested in continuing to track this with you, they can go to thetechnicaltraders.com. Can you share with us what they'll find there?
Yeah, if you go to the website, thetechnicaltraders.com, you'll get short videos. I walk through the charts. Really, you're copying the trades that I do. So my strategy is based around managing my own money. And so whatever I do with my portfolio, I tell you the ETF, the portfolio allocation, our stops, our targets. We walk through those. I educate you on the markets throughout the week. So you're up to speed. Visually, I share and draw on the charts. We do live mentoring sessions so we can talk together and you can ask whatever questions you want. And we just kind of navigate these markets together. I manage my money, you manage your own, and you just copy me if you want. That's how I go about it.
Fantastic. Chris, once again, thank you so much for your time, and God bless.
Thanks, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 30th through October 7th, 2024, while supplies last. First, we feature backdated 1-ounce gold Canadian maples at just $60 over spot. Next, we have 2024 1-ounce Silver Britannia at $3.10 over spot. And finally, the 2024 1-ounce Silver American Eagle is still just $5.25 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.